Welcome back. Now, I'm Ted Thomas, and I've been involved in the tax lien and tax defaulted property business for over 25 years. Now, in this episode, I'm going to cover Texas property tax sales. Texas property tax sales. I'll also go over some tips on how to make money at tax defaulted auctions and property sales. Now, there's a couple of mistakes that I want to make sure that you avoid. So at the very end of this video, I'll tell you about 2 mistakes that people make at the auction that you definitely want to avoid. So stay tuned and I'll be right back. In this episode, I'm going to cover Texas property tax sales. Now, Texas is a big state, a lot of action going on here. Population is 29 million. Now, the biggest counties like Harris County, Dallas County, and Tarrant County, you'll find a lot of properties that are for sale. Also in the southern part of the state, down around San Antonio, quite a few properties. Now, the total counties in the state are 254 counties. They have more counties than any other state in the United States. All right, now they don't sell tax lien certificates. What they do sell is tax defaulted property. So I'm going to take a minute and give you some foundational material so that you understand the difference between these two. So number one, we talk about tax lien certificates on a regular basis. What happens with a tax lien certificate is you raise your hand at the auction and you purchase a certificate, and when you do that, you pay someone else's taxes. You do not get possession of that property. So that's a pretty benevolent state that doesn't kick the people out. So that's a tax lien certificate. Now, all you get is a piece of paper at a tax lien certificate auction. Now, if you decide you're going to go to tax defaulted auctions where you get a tax deed, those states, what they're doing is they're actually confiscating the properties that haven't had property tax paid. Now, that simply means that someone defaulted on their property tax. The local government, the county, gives them many notices. I mean, they might get 5, 6, 7, even 10 notices. Sometimes even the sheriff delivers the notice to them. Okay, well, if they don't pay the tax, the local government will confiscate. They'll actually seize the property, and then they take the mortgage off the property. They wipe it off the property, and then they resell it. All right, so you're buying in tax liens or tax deeds, the mortgage is wiped out. Now, it's not going to work out quite that way in Texas. Texas sells what they call a redeemable deed. In other words, you go to the auction, you raise your hand, and you bid for whatever price you want to pay, and the highest bidder gets it. But what they get is they get a redeemable deed. Now, what is a redeemable deed? Well, it's a deed to the property, but you don't get possession. You get the deed, but you have to wait 180 days. During that 180 days, the property owner is allowed to come in and pay any time they want. They can come in on any day they want to pay. They can pay. They have to pay whatever the highest bid was, plus a 25% penalty. Now listen to what I said. I said a 25% penalty. So if they come in the next day after you bought it, they have to give you back all your money plus 25%. Now these are powerful rates of return. Now the legislature in Texas has authorized all the counties to levy the taxes and then go out and collect the taxes. And if you don't pay the taxes, the property tax that is, if you don't pay it, they're now authorized to take that property to auction. When they have an auction, which they'll have on the first Tuesday of every month, remember there's 250 counties, they're all authorized to have an auction. Problem is they do all the auctions on the same day. So that's probably to keep people like us from going county to county. But the point is, they have all those auctions at the same time. Now look, I'm not an attorney, I'm not a broker, I'm not a real estate person in any of those senses. However, I'm a guy that's done this for 25 years. Actually, I've done it for 30 years. My first years, I just bought tax lien certificates, and then the last 25 years, I've been buying mostly tax defaulted properties and teaching people how to do it. So just keep in mind, I'm not giving you legal advice on any of this. So Texas is ruthless. They're not going to wait around for the taxes. What they simply do is if you don't pay, they're going to let you know, they'll give you due process, and then they're going to take the property to auction. They auction properties every month in Texas. So there's 254 counties in Texas. That means there's probably real close to a couple of hundred auctions every single month. Now, what do you get at the auction? You get a redeemable deed. Now, what does a redeemable mean? You bought a deed to the property. If the property owner doesn't come forward and buy back the deed, doesn't pay you back all your money, plus a 25% penalty, well, then you're going to get the property. All right, so the property owner has a redeemable deed for 180 days. Now, I want you to be aware of a couple of things here that you need to keep your mind open. Number one, you do not get on the property when you buy the redeemable deed. You have no possession. You only have that redeemable deed. Now, number two, the loan document in Texas is called the deed of trust, or trust deed, whichever one you want to call it. That's the loan. So it's not a mortgage, it's a deed of trust. It stays on the property. So when you buy the property, you get the loan. Whereas in other states that sell tax lien certificates and sell tax defaulted property, in those states, what they do is they wipe out the mortgage. Now, does that mean that they come in and they tear up the mortgage? No, they just, in terms of the title to the property, the local county pushes the mortgage off, or the deed of trust off the property, so you buy a property that's clear of almost all the liens. Now, you need to read the auction rules and you need to read the county rules so that you know and you feel comfortable with what documents are going to be left on there. But generally speaking, the mortgage or the deed of trust is wiped out, and most liens are wiped out on the property. What kind of return will you get if you do business in Texas? You're going to get a 25% return. So if you bought a certificate today and they come in any day to redeem that redeemable deed, any day they come in, they have to pay you whatever you paid plus 25%. So you're starting to see that's a pretty good rate of return. All right, so I've been talking about Texas property taxes, okay? All right, remember the redeemable deed is not affecting the trust deed, which is the loan on the property. All right, the same situation takes place in the state of Georgia where they have a security deed. That security deed stays on the property. All right, so these auctions are every month and the first Tuesday of the month, and they're a little bit confusing in some of the big counties. Like Houston will have constables selling the redeemable deeds, and they might have 6 of those constables in the same room selling at the same time. So it can get a little bit on the confusing side. Now, I want you to keep in mind, I'm finishing up this video, and as I finish up, there's 2 things that you have to be very careful of at auctions. So I want all you newcomers to pay close attention. There's 2 mistakes you just don't want to make at these auctions. And number one is you do not want to buy a property that you haven't looked at. You need to look at it, because if there's been a big storm and there's been a flood or there's been a fire and the property's been destroyed, whatever you buy, you're going to get and you're going to have to pay for. So you better make sure that there's going to be a property there. Now, the other big mistake that people make, and this is a real concern, is people get there and they start bidding and they don't have an exit strategy. Well, if you don't know what you're going to sell it for and you don't have an exit strategy, certainly don't bid, because you might bid way too high. Okay, one of the questions is, will you have to talk to the homeowner when you get involved in this business? Now, it's going to be different in every state, but generally speaking, the local government does all the work. In Texas, they might ask you to go out and do some of that work and talk to the homeowner. So that could happen in Texas, that the homeowner would pay you. But in most cases, what they're doing is they're paying the local county, and then the county handles all this paperwork for you. So you need to check the rules so that you know exactly what's going on. Okay, here's a really good question. Can you do anything on the property during the 180 days? Could you improve it? Well, anything that has to do with safety, you do want to be concerned about. But just keep in mind, the homeowner is staying on that property. I don't think you want to disturb anybody that's a homeowner. But if you go there and you make the connection with them and they don't mind you doing that, that's fine. When you buy properties and the homeowner isn't there, it's a whole different story. But in Texas, you don't get possession of the property. But if you do spend time and money, keep a record of what you're doing. Like if the roof is leaking, you decide to fix it, or you decide to fix some object on the house. Keep records of what you're doing, because when it comes time to redeem, you want to make sure that you get paid all that money. Now, if you're learning a lot from these lessons, well, I'd like to have you be part of my community. And what I have is I have a free gift for you. All right, now what is the free gift? I call it a safe haven. It'll teach you about tax lien certificates, and it's, of course, to teach you about tax defaulted property. So that's a free gift that you'll receive just by registering. Now, when it comes time to register, you're just going to go below me.